This is Mike Swanson of Wall Street Window. Odds are you're watching this video because you got an email from me telling you it's up. If you're not on my email list, go in the description and subscribe. It's completely free. We're in an interesting year in the stock market, and today I want to highlight a stock market sector that is coming alive. You have seen the S&P 500 go up over the past couple months. You've seen the Dow go up even more than it, and the Nasdaq kind of languished. The Nasdaq has not gone up as much as those other two averages. In the last video I did, I showed you how that the internals of the stock market have come alive. What this means is that there are more stocks going up than going down. In fact, there's a lot of stocks that are doing well, but the Nasdaq is not doing well because the stocks inside of it are not doing as well as the average stock. What has happened is on this rally, there has been a big money shift into new leadership sectors. And these sectors are going to continue to outperform the Nasdaq 100 stocks because so many people are already in those stocks. And they're old news. To give you an idea of what I mean, think about crypto. How many people in the past couple of years do you know that bought crypto and told you that it would make them rich? They would go to 100,000 or a million, and they would tell you things to try to convince you this that really made no sense. And crypto crashed because the things they were telling you or that they heard never was at any basis in reality. It's never, Bitcoin has not replaced the dollar. It's not easy to use, and it never will. But here's the important thing. Out of all the people you know that own Bitcoin and crypto or have bought it in the past couple of years, think about the people who never did, and you may be one of them. Do you think those people that never bought into crypto are now going to buy it? No, they're not. And that's why crypto is doing so bad, because everyone that's in it is sitting on big losses. That's how bubbles work. And in the stock market, we saw a bubble form in after 2020 when you had a big rally in so many fad big cap technology stocks. Tesla is the biggest poster boy of this. And these stocks did good in 2020, peaked in 2021, and were awful in 2022, and are still doing terrible. The problem with them is that everyone got in them, and and now they're sitting on losses, and they're just like this giant overhang. So what you're seeing in the market now is outside those stocks, things are much better. And I believe the way to make money is to focus on those type of situations. To take my crypto analogy, think about the metaverse. You were told the metaverse was the future, that it was just everyone was going to get involved in it, and this was going to help the Facebook that changed its name to Meta, that stock go up. The opposite happened. No one wanted the goggles because the goggles gave people headaches. Even the people developing this metaverse didn't like it, and it never caught on. How many people do you know are even interested in it? Nobody. Didn't work out. Wasn't grounded in the real world. So we're in a situation now with this market where people want to buy into companies that are solid, that have stable earnings after what happened last year and the possibility of economic slowdowns, inflation, and so forth. They want stability. They want stable dividends, stable earnings, things grounded in the real world. That's one reason why you're seeing gold and silver do well. Mining stocks have been among the top performing stocks, period, since Labor Day and since the end of September. Copper stocks are on fire. Look at what Rio Tinto is doing. Look at Southern Copper, what it's doing. These stocks are on fire because they're grounded in reality. They have nothing to do with metaverse and these fads. And there's stocks in a similar situation that you have products or services that you may be using today, or could have used today, maybe in your house, or maybe you're going to go and use them. I'm talking about consumer staples and restaurants, things right in your neighborhood. So let me show you the charts that make me excited about this and some of the stocks. So this is a exchange traded fund that tracks restaurants. It's a restaurant ETF. And what I want to point out to you is the bottom indicator on this chart. It's a relative strength ratio comparing this exchange traded fund to the SP 500. It's been going up since August. You see, when the SP 500 made a new low in October, and the Nasdaq did, and is continuing to act terrible, this ETF did not make a new low in October. It formed a positive divergence and is now a leading sector. And when you look at some of the individual stocks inside the sector, you see where the money's going. You see stocks with stable earnings, and they're paying dividends between 3 to 5%. That's real world stuff. And that's what serious investors want. They don't want to buy into a crypto coin that's likely to fall 90% easily. It doesn't pay a dividend, has no earnings, represents nothing in the real world. We're in real, that's where we are now. You know, people want stability. And so let's look at some stocks in this sector. I'm going to show two, and then we're going to look at some consumer stocks, because that's what this market's about. And frankly, when you're in this part of the economic cycle we're in, you're not in the real booming growth phase. This is the type of stocks that do well. Stable earnings, stable dividends. That's where institutional money flows into, and it helps these stocks go up. Well, you're looking right here at Cracker Barrel, up 5.92% today, and it's paying a dividend around 5%. It's a stock that's been outperforming the stock market now since July. If we're going to have a healthy market this year, at least a market that's not like it was last year, it's stocks like this that are going to lead and help that happen. When I showed you the video the other day about the stocks that have been going up to help the advanced decline line go up, to help the percentage of stocks above the 200-day moving averages go up, that indicator just turned up in October. It's stocks like Cracker Barrel, symbol CBRL, that are doing that. Let me show you another stock. It is Brinker International, owns a series of major restaurant chains across the U.S. It's breaking out today above its December high. As I'm doing this video, it's at a daily high. This is a breakout. It's already well above the 200-day moving average. It broke that in November and retested in December successfully. That's the green line on the chart. Look for leading sectors of stocks above their 200-day moving averages. Stop trying to guess bottoms and junk. Go into where the leadership is going. That's what you were doing in 2020 and 21. Do it now. These are the stocks to do it in. Another one I'm going to show you that pays a healthy dividend, completely stable earnings, is Whirlpool. Whirlpool on the verge of breaking through its 200-day moving average right now, testing its December high, testing its November high. It's been outperforming the S&P 500 since July. Look for stocks outperforming the S&P 500, not underperforming. Another stock I'm going to show you is Hooker Furniture. And all these stocks I actually own in my portfolio. It doesn't mean I might, own in my portfolio, make changes all the time. This stock is up 2% today. And it's acting even stronger in the past couple of weeks than the other two stocks. This is a stock that made a major bottom in October, and it's doing great. And these are the things that are working in the market. Look, markets go through cycles, and there are major rotations in leadership that happen, even asset classes that happen. We're now going back to the way things were before 2022. It's not going to happen because we're in a different economic environment than we were then. We're in a different financial environment than we were then. And that's why it's sectors and stocks grounded in reality with stable earnings and dividends. That's what you want to focus on in 2023. Forget pie in the sky, forget metaverse, forget crypto. Think about stability. That's where the money's flowing. That's where you can make dividends. And I think that's what you need to get interested in if you want to do well in the markets this year. Look, if you like this video, hit like so I know that. If this is the first time you've ever seen me on YouTube, to get my next video, hit the subscribe button, then hit the bell next to that, and YouTube will send you an alert as soon as it's up, and I'll be talking with you later.